see this over here? Huh?
Yeah, what's that?
That there is sparkling water, mister.
Caffeine?
Nope. Strawberry and cucumber, no caffeine, no sugar, no nothing. No fun.
Yeah, why do you drink it then?
Just working on, gotta bring that soda down a little bit. It's not good for you.
Still got caffeine?
I had coffee.
That's it?
Yeah. I feel good. I don't know how long it's gonna last, but we'll see.
Doesn't sound. It sounds like you're saying you feel good, but you don't actually feel good.
I mean, would I like a big soda right now? Yeah. What is it? 3/4 voltage? No, 5/8 voltage, 3/8.
I don't know your order.
Wait, you need 5/8 and 3/8. Yeah.
Oh.
See, it's going well,
Yeah. Well, now I see why you're on parking lot.
Feed's going well. Hey, welcome to the Closing Beat. Happy Monday. How we doing out there? Welcome. Hope you're having a good day. We are financial advisors here at Jazz Wealth that do things a little bit differently. We help you out, man. We help you get your dough straight. We're not intimidating. We try to wear the normal clothes, act normal. Spent years getting rid of the corporate talk out of my corporate mouth there. So, it's just, that you understand we're here to help. We're obviously have nothing to sell. We are obviously knowledgeable, but we're not trying to pretend like we're somebody we're not. And so we're having a little fun doing that. Thank you for joining us here today. What's going on with the stock market? So if I go over here real quick, I'll just show you. Last week got a little bit of a rally back to the 50-day moving average. A lot of stocks attempted to get back over their 50-day moving average. We're looking at the S&P, by the way. And today, people are not so sure that we're going to move higher. Why is that? Well, you can use a number of different scenarios, right? The 50-day moving average is officially broken. Technical traders like to look at that, but you could also look a little further and say, well, that's about halfway back, right? It's a silly thing to do, but this is what people look at. You've got a high, you got a low. We've rallied about halfway back, and so now the glass is not half full or half empty. It's like right in between. So you have people that believe one or the other or want one to happen, either a decline or a further rally there. And so that's why we stall, right? There's no reason to believe we're going to continue to be bullish or bearish. There's no headlines. There's no nothing. We maybe have a reason to be a little bit more bearish with the government shutdown and all that great happiness that's going on there. And so there's a lot of real weakness that's still out there. Right? If you look through the whole market, if you look at every single stock in the entire market, it's like 8,200 and some stocks, right? 50% of them are above the 50-day, 50% are below the 50-day. So even just not looking at the S&P, if you look at the entire stock market, you have a complete standstill. You have a moment in time where there's an equal number of bears as there are bulls. And so that creates a little bit of pause, right? At least to start the week off anyways. If you look at the S&P 500, 52% of stocks are below the 50-day moving average. So slight bearish bias there, but otherwise we're just going sideways. Not a big deal there. If we look at the stock market here today, the S&P takes the top spot year to date, actually, but that's only because the NASDAQ was a little bit weaker on the day. If I look through some of the stocks that you might be looking at, Tesla, one of the bigger gainers today, and actually banks and energy. So that sums up the S&P. Your strength was Tesla, the banks, and energy. That's pretty much what moved the markets today. If you look on the downside, unfortunately, it's some of the FANG names that were pulling you lower. Microsoft back to the 50-day. Apple struggling to get back above the 50-day. Adobe's one that stands out. Quite a pullback here on Adobe. I had an order to get a position there today. I did not get filled. But anyways, you got Adobe pulling back on the day. And NVIDIA, one of the weaker ones, which is one of the more headline stocks. They usually say like FANG plus Microsoft and NVIDIA. That's kind of how it's going lately with what's moving the markets around. On the other side here, you got banks. JP Morgan moving to new highs today. Actually, financials as a whole, you can look at Bank of America almost hitting new highs. I believe it hit new highs, actually. And that's because the 10-year yield continues to rally. I'm going to show we'll use the 10-year here. Now, a decline in prices of the 10-year means the yield is actually moving higher. We're getting around that 1.5% area there. And we get basically a little bit of strength that's actually much needed because your lesson of the day is your real yield. We've been saying for a while, you have negative real yields. And I was talking to a guy at the airport. I realized some people don't know what that means. So if I take a look real quick here, if one were to say they're going to invest in the 10-year, and they just want the safest possible play. Who can you trust more than the government to pay you back? That's what they say. You're looking at the difference between the 10-year and inflation. We have a little bit of an issue right now. They normally trend in the same direction there, by the way, but if you want to generate a positive real return, then you would need to return or yield more than inflation. So for example, if we were to look here, and let's just say, I'll just, for an example, before I show the exact thing here, if you're yielding 2% or 4%, but inflation is 2%, which is a number we're mostly familiar with, then you have a real yield of a positive 2%. In other words, it was worth it to go out and make 4% on whatever it was, in this case the 10-year. You realize you lost 2% to inflation over some period of time, and so your real yield was 2%. Well, it's a little bit backwards right now. It's actually the most backwards it's ever been since before I was born. I was born in '82. I've never seen a spread larger than what we see, where you have inflation considerably higher than what you can get with the safest possible investment, or the no-risk type investment, which is the 10-year yield or 10-year treasury. So we've got the 10-year now rallying a little bit, but trading around 1.5%. So if you were to buy that, 1.5% is your yield. You would be losing 4% to inflation. This is core inflation, by the way, so taking out all the stuff that wiggles around a lot. And so you're actually losing as you have a negative real yield. So when they say you have a negative real yield, in this case right here, you'd have a negative real yield of 2.5%. In other words, you made 1.5%, inflation cost you 4%, so you got to back that out. You're at 2.5%. That doesn't really, that's not very exciting. And so what's happening here is prior to 2008, there were only a couple actual times where you had a negative real yield, meaning inflation was higher than your 10-year yield there. Since 2010, which is right here on the chart, it's happened a lot because we have low yields out there. The safe investment doesn't always outpace inflation. So where do you go? Right? Where do people go that need that safe investment, maybe need the income, but inflation's eating it away? You got to go to the stock market. And so now you understand why the stock market's maybe having a little bit of a move here, or continues to trend higher, because the safe money has no choice but to move to the stock market, take that extra level of risk. Now, mutual funds know this as well. And so if you were to look at any target date fund, you could look at stocks versus bonds, depending on the target date that you chose. When you look at the bond section, you're going to see that all of their bonds are in short-term notes. 90-day, 1 year, 2-year treasuries, 5-year, 10-year. Not even really 10-year. You go beyond that, they're not taking that risk. So they have to have a certain amount of their fund in bonds. But they're not going to go out to do the 10 and 20, 30-year bonds, because they're not paying anything. It's a guaranteed loser. Your real yield on that portion of the target date fund would be a loss. It wouldn't show necessarily on paper, but you lost because of inflation, right? So that's one thing to consider. When somebody says you have negative real yields, that means you're losing. You just don't see that you're losing unless you happen to notice inflation, like a lot of us do. And so that's what you have going on there. So it's actually a good thing that bonds are falling, or the 10-year is falling, meaning the rate is going higher, because, well, it doesn't make sense for anybody to consider having any kind of bonds, really, if you're looking for any kind of consistent real yield. So there you go. All right, looking over at the Dow here today. We're also at the halfway point, right? So you see right there at the 50-day moving average. It's the same thing. Banks in the Dow, you're going to see like Goldman Sachs doing better because yields are higher. Banks do better when yields are higher because interest rates are higher. They can loan at higher rates. There's a greater profit margin, yada, yada. So that's how that works. I'll also point out JP Morgan, which I already did a second ago, back to highs there as well. And if we look at Salesforce.com, an above average move, you know that from the show we did last week. It just pulled back a little bit, so that weighed on the Dow. So did Nike, almost back to the 200-day, and Microsoft you already know about because we talked about that. Now, Nike is the headline stock in the Dow right now, down 1% because they have some supply issues. It continues to be a concern. This is last week's news, but thought we'd break it down just a little bit further. If you look at Nike's total revenue, here's how it breaks down. They got $12 billion in revenue, and we broke it down on a pie chart to show you here. Footwear accounts for over 60%. That's $7.7 billion. Apparel, the expensive shirts and whatnot, $3.5 billion. You've got Converse in there. Yep, they own Converse, and general equipment that they sell with their check mark stamped onto it there. So the problem is 7.7, if you're wondering like what's going on with Nike, 7.7 billion of their income comes from footwear. Well, half of this money is generated because of product that they produce in Vietnam. Well, there's a lot of issues in Vietnam with COVID and the way they're handling the shutdown and everything over there. So that's a problem. Over here, 3.5 billion, you've got 30% of the apparel business is generated from Vietnam. So basically Nike has said, we have some supply issues. We're not going to try to hide it. And that's what we know is going on right now. But they're saying going forward, it's going to continue to be really, really bad. Now, if you look at Nike, of the 12 billion that they do, they have a gross profit of about 5.7 billion. These are big numbers here. But it makes you wonder, could they not just make it up by not spending as much on marketing? They can't, but it's a joke, right? But they have overhead expenses of 2.7. They've got marketing of basically $1 billion they spend on marketing. They make a profit of 2.1 billion. $918 million. Think about that for a second. If you know your supply is running short, you don't need to sell as much because you can't get the product to sell it. Do we really need to spend $918 million? Somebody's probably asking that question there. Could we not just drop that budget for 12 months or so? I doubt they do, but that's what you have going on with Nike there. So anyways, that's a little bit of an extra lesson for what's happening with Nike. If you look at the charts of that one there, back to the 200-day, the supply chain issues are, of course, priced into the stock, putting it back towards 145 and also acting as a technical support area if you happen to be looking at it. Now, if you're looking at the Dow and you're curious where it's going to close, take a bet. Go on jazzwealth.com/guess the Dow. And I believe we have a winner from last week, and let's see how we're doing. Oh, it's in one year. Yeah, I turned the mic off. So jazzwealth.com/guess the Dow. And really, there's no catch, right? It's just $100 if you win, no strings attached. We don't sell your email. We don't care about any of that other stuff. That's what you have going on. All right, I'm going to take a little different approach here for the sectors. Here's a sector breakdown for the day. I mentioned already energy and financials being the leaders, the real standouts there. It's kind of bad news because if you look at the price of oil, we're back to highs. I'm sorry to say it, but we're out of the main driving season, the main consumption area for gasoline anyways. But the price of oil is hitting new highs, and the U.S. cares to do nothing really about it. And that's not political. That's just, yeah, they've taken the stance that this is bad stuff. We don't want to deal with this anymore. And so the price is higher and will be continuing to go higher. If you look at energy as a whole, that's where all the action is, participating in the rally in, of course, the rising price of oil. But I want to point out real estate. Real estate was your leading sector at a bunch of different points. It was the leading sector year to date. 11 sectors, that was your best performing sector. Well, recently it's pulled back quite a bit, to be honest. If we just look to see going from highs to lows, I don't know how many of you are playing along in real estate here, but you got a 7% pullback in the works. And so if you look around a lot of the different stocks in there, there's a lot of pullbacks for short-term traders, right? And so one of them, I can't tell you what to do, but here's a trade that I did. And I just want to bring it up and share some of the reasons why I thought it was a good idea, or at least I hope it's a good idea. I sold the 170 puts on Crown Castle International. One of the REITs that are out there, they call them, I don't know if they call them 5G, but they're the cell phone tower type REIT. That's what they do. So they're not like apartment communities or commercial space or anything. It's a cell tower type REIT. If you have land, you've probably heard of them. Anyways, you got a severe pullback here. And here's what I was looking at. You got a drop in the last 5 days. I always look back 5 days. If I go 5 days here, in the last 5 days, we have fallen a total of 6%. Right? Makes sense. Nothing too crazy there. I'm looking for my screen here. Here it is. So we're going to use this little tool, which I think is now officially ready to go. So we're going to say, Crown Castle, how often does it fall more than 5%, or 6%, I'm sorry, in any 5-day period? Is that odd? Any single 5-day period. I'll look back as far as I can, just for the moment. We're going to let it run its thing there. Oh, it changed on me. Charlie must be updating it there. All right, so it changed on me. Basically, in the last 20 years, 20 years minus 6, I did the right thing there. In the last 20 years, it falls 5% in 7 or 6% in 5 days, quite a bit, right? The next 5 days, nothing happens, right? It barely budges. 50-50 shot that it's going to be positive or negative. So if you were to buy shares of Crown Castle, why would you do that? You got a 50-50 shot it bounces. I would argue that it leans towards the upside there. Maybe it's overextended. You got a chance that it bounces. 50-50 shot. So by selling the 170 puts, I actually don't care if it goes sideways, bounces, or even falls a little bit. I got a 50-50 shot that it does a whole lot of nothing in the next 5 days. Well, if you go out further and you look, if you look over here, go the last 20 days, it's fallen over 10%. I'd call it 10.7%, right? In the last 20 days. Okay, so run the same scenario and you go, well, how often or what happens after it falls over 10% in 20 days? Does anything happen? No, nothing happens. So looking back 20 years, or as far as we could go, you look back and you say, nothing's going to happen. Statistic, like we did with Salesforce the other day. Although something did happen after we got out, right? It did continue higher. But in general, in that little window, nothing happens. For 5 days, Salesforce didn't do anything. Then it took off, right? So for Crown Castle, over the next 20 days, nothing happens. You got a 50-50 shot. I believe it was 48% of the time it actually finishes positive. Okay, that's good. If it goes positive, we'll take it. If it goes sideways, we'll take it. If it goes a little bit lower, no problem. But nothing dramatic is supposed to happen in the next 5 days. And so that's the reason for that play. I think I got $3.15 or something for them. Try to pull it up there. $3.16 by the time it went through. So that's the game plan there. Now, could something happen? Of course, but we're already oversold. We're very much oversold in the short term. This stock does not like to be oversold in the short term. So even though we are not short-term traders, I just like doing some of this for fun and sharing it with you guys that are here watching. Even though it is a short-term type view, not really much is supposed to happen. You would not buy the stock here. Statistically, I'm not telling you what to do. Statistically, you wouldn't buy the stock. There's no real chance that you're going to make a profit. It could fall further. But if it goes sideways, slightly lower, slightly higher, there you go. You got a little small trade in there, and we'll see what happens. I'll keep following up with you. A couple others that stand out is Public Storage. You probably know these guys. Those are the buildings where you open up the garage, you put your stuff in it. And so that was down another 2 3/3% on the day-to-day. Very extended in the short term. In fact, a lot of stocks in the real estate sector are giving you that pullback look right now, the oversold kind of pullback move. I think American Tower's in the same boat. I didn't like this one because this is more of a wake up and fall kind of a stock. I like the ones that bleed lower little by little. And so I'm just saying, if you're out there, you're trading, you're doing the things in the short term, you might look up the real estate, maybe the top 10 or 15 stocks in the real estate sector and see what you see as far as maybe getting a little bit of a pullback there. So I thought I'd point that out. We'll see what happens. New highs and new lows. We had 27 new highs. You had 4 new lows on the day. I'll point out a couple of them here. You can see it. Live Nation hit new highs. Breakout of a sloppy sideways uptrend here. Maybe a little momentum. You all know if you've watched long enough, I don't like stocks that move extendedly up to where they're trying to break out. Then they break out. I think traders didn't like that today either because it broke out and you saw no real follow through. It broke out into an overbought type scenario, and so people say, well, I don't want to pay top price even though it broke out. I will maybe nibble, or I'll wait and see if it pulls back a little bit. So that one stands out. Energy, you could pick on a handful of names today, but I show Cabot Oil just to really highlight how strong energy has been lately. This is, of course, an energy stock. It's in the oil space. It's participating with the rise in the price of oil there, so thought I'd pull that one to you. Lincoln Financial in the insurance category, there you go. If I put my line there, you can see a little bit of a sideways consolidation that is trying to break above, not as extended in the couple of days leading up to it, and not overbought at the time that it broke out, so a little bit better there. Hey, back to REITs real quick, Regency. So here's a REIT that didn't pull back. If you're one of those that says, okay, the pullbacks scare me, don't want to catch a falling knife, blah, 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 I don't want to be scared of that. You look at something like Regency where it actually held up. It has yet to pull back. It's showing relative strength is what they would call it compared to the sector. The sector's pulling back. Regency refuses to pull back. It also hit new highs today, but remember, there's real weakness in this sector, so that's the negative. You're trying to buy a breakout with the market not sure if it wants to go higher and the sector currently selling off. So it's a watch list type thing. I don't know. It's a, that's a tough one. Whereas on the other hand, you have banks showing extreme strength. Obviously, they're excited about the yield moving higher. You have the stock market as your one negative. It doesn't know if it wants to go higher or lower here, but banks know what they want to do. And because of that, Schwab knows what it wants to do. It breaks out of this range here, hitting new highs and slightly extended in the short term there. So I thought I'd point that out as well. And for new lows, I don't think I covered any of those. All right, let's take a look, and then we'll take a look at the stocks in the news. I'll take your questions if you have any. Amazon, slightly lower on the day. Whole Foods going to charge you, what, $9, $10 to deliver foods now? And also Morgan Stanley, that's kind of the main news. Morgan Stanley came out and said they think that it's worth $4,100 as their target. They were at $4,300. They said wages are the issue there. Amazon's paying, of course, more and more. They're doing great by that. People that want to go make more money and work for Amazon, it's great. The problem is, just like everybody predicted, you make more, but that's not enough. You want to make a little more. It's not worth it. You want to make a little more, so on and so on. It's the way the world turns. So that's Amazon. By the way, Cody, are you over there? Did you see the tweet thing going around with they're trying to get a petition started for Jeff Bezos to buy the Mona Lisa, then eat it?
Oh.
I'm not kidding. That's a real thing.
I didn't see that, no.
Yeah. Why?
You can ask that about a lot of things on Twitter.
Yeah, on Twitter you could ask that a lot, I guess, but that's a weird thing. It started as a joke, and now people are like, yeah, buy the Mona Lisa and eat it. What? Why is a guy going to do that, man? That makes no sense, man. People need to probably go back to work, huh? Scotts Miracle-Gro. So they're in the news there. Barron's over the weekend said that the current valuation of the company, given this recent pullback in here, does not reflect their hydroponics business, in particular their urban indoor hydroponics business. If you're curious, that's the Hawthorne acquisition they did years ago. Wow, maybe it was last year. Recent acquisition of Hawthorne, which is focused on the urban community that doesn't have like a yard, right? You live in the city and you want to still grow your vegetables and stuff like that. It's 28% of their revenue. And basically Barron's is saying that investors aren't factoring that in at the moment. So they were bullish on that one. Apple. All right, so Apple's in the news because the Nikkei, Japanese reporting there, says that some of their suppliers have halted production due to energy consumption limits. If you don't know, in China, they're going around saying, you're using too much energy, we need you to stop for a few days. In some cases, even longer than that. It's a whole climate change thing. They're saying, just stop. No more production. You've used too much energy. We're now going to determine how much energy you can use. Although that did impact Apple, the interesting thing is their suppliers said, we have enough inventory to offset our sort of pause in production. So there you go. There's enough there. But if you look around, it affects NVIDIA, Intel, Broadcom as well. Their suppliers all had to stop production as well. And you didn't see the same comments out of those. Just saying. I don't know what that turns out to be, but it's what it is. Wells Fargo, again, being sued by the U.S. here, the government, saying that they have overcharged clients, commercial clients, on their currency exchange process there. So they overcharged clients there, likely took a larger part of the spread. There's only a couple hundred clients at the moment. We'll see what happens. Facebook in the news, they're going to stop their Instagram Kids for the moment. They're just not going to do it. That whole app where kids could send pictures to each other and stuff got a lot of pushback, and Facebook decided, we're just going to wait. We'll see what happens. The stock was still higher on the day. Didn't seem to affect it in any way. And Blackstone down about 1.5% on the day. They're going to sell the Cosmopolitan for, I think, $5.5 billion, somewhere in there. If you're not familiar with the Cosmopolitan out in Vegas, it's actually a fascinating story of when it was built, how much money they spent, the numerous times it changed hands because they spent too much money. Blackstone gets their hands on it, turns it around successfully. They're going to make a nice profit on it to the tune of billions if they actually do get this sold. And what a bright group of people there. Huh? What a bright group. All right, tomorrow we've got earnings from Micron. That'll be the big one that everybody's focused on. You've got Fed... one or two Fed chairman, Fed presidents speaking, so we'll see what happens there. And we will take your questions if you have any and see how we can do here. Rumors, Christmas parties at Amazon stink. Oh, we have a client that actually just started. I know we have a lot of clients that work at Amazon, but we have one in particular that I know of that is about to start, so we'll see what he says. I love it. You like international equities on the rise? I think it's it's a stock pickers type area, though. I would not buy a mutual fund or an ETF there. I think you got to sort of segregate out the positions that are a little bit weak or have the regulatory issues like a lot that's going on in China right now. Maybe a concern there for you. Yeah, I love it. We'll see what happens, man. It's going to be an interesting couple weeks for sure. What happened to AMC? It tanked today. I don't see that. So let's go over to the charts. AMC down 1.7% today. I don't see. Maybe you typed the wrong symbol or something. Hey, you got your FedEx there. What'd you buy? 230 calls on FedEx. So you're looking for a bounce on that one. Okay, so close enough to the money there. You see that thing is oversold. You want to take a shot on a bounce. I'm still waiting on old FedEx for me. So that's nothing's happened yet. I had a slight profit the other day. It is... I'm up a whole $17. So, no, I'm not. What am I up? Yep, $17. Yeah. I sold the 220 puts on that one, and actually, I think it's just there's something wrong. I'm probably down on that one, to be honest. I think the quote is messed up there. So, probably down a little bit on that guy. But yeah, I mean, oversold, looking for a bounce. I got no argument with that one there. Yeah. You want to add on a position? Oh, BMY is a position you want to add on. It keeps bleeding lower there. Yeah, I don't blame you. That's a tough one. I don't know where you stand as far as like how much you've averaged into it or where your limit is on that one. Can't blame you for averaging into that one on the discount, but no sign of a bounce. And what's kind of bothersome or worrisome if you look at it, here's the attempt at a bounce. 5 days. 5 days it was green before it turned red or just lost most of its green, to put it simply. And basically today is people giving up. This was like the last attempt, right? So I wouldn't be in a hurry to say, let me add to it. I look at that and say, the bulls had their chance. 1, 2, 3, 4, 5. Today's the 6th day to really put a bottom in here, and they couldn't do it. So likely some stop orders, people just giving up there and moving on with it. Cannabis is stock pickers industry. Yeah, but the ETFs, if you look at the holdings of any of those, they tend to hold the top 5 in a more aggressive way. So they'll have like 18%, 12%, so on and so on. So you could get away with that. Anytime you're thinking of a sector, let's say it's even retail. I don't know, not a sector, but retail came to mind. So if you're thinking retail and you say, well, I don't really want to be focused too much on one stock. I want to be broad retail here. Or the other way. You say, I like retail, but I don't like some of the crap that's going on down there. I want to be more focused on online retail. Well, you would look at the difference in holdings between the XRT and the RTH. Two common ETFs in the retail space. They both have different objectives as far as how they allocate their dollars. So the RTH is going to be more 1% of each company, very even, more equal weighted index type approach. Whereas the XRT is going to say we're going to lean towards Home Depot, we're going to lean towards Amazon a little bit, and they'll have a higher allocation there. You can do the same with the cannabis stocks. There's only a couple ETFs, anyways. Yeah. Oh, yeah. You got a training video on puts, you remembering right? Probably. Yeah, got a couple of them. Got a handful of them there. I did the one in particular I'm thinking of where we went through every scenario and just did it the old-fashioned way that they used to teach when you didn't have a computer. You'd had to draw it out. Some of you know. You had to draw the plus sign out, and then you would go calls, puts, calls, and you'd draw out all the different scenarios. That's probably what you're thinking of. Mm-hmm. Nice. I love it. Look at you guys. All right. Let's see. We got a full week on this one, by the way. Got a little bullish move on Malibu, of course. Yeah. Still. Yeah. Now, I'm not saying there's this guy here doesn't go back to 90 anytime soon. You know, you darn near need a new shutdown, more stimulus, and all that. I don't think that happens, but yeah. Yep. Thoughts on old Mercado Libre? What's going on with it? You own it? What you got there? What do we got? A price target change. Handful of upgrades there. Stiefel going to 2,200 from 1,900, so there's an upgrade. And I think a couple others. 4 different changes. All positive from what I can tell. Yeah. Sweet. I don't know what the question is. Like, do you own it or want to own it or whatever? I don't know. But I do know we'll be back tomorrow to do this all over again. I wish you a good rest of your day. And thanks for watching. I appreciate it there. Hopefully you learned something. A couple different little lessons to start out the day, and we'll keep it going. We'll be back tomorrow to do it. Enjoy. See you later.